will win the economic growth race in 2025? On one side, you have the rising giant, the powerhouse of Asia, the world's most populous democracy, India. On the other, a nation at the crossroads of continents, a strategic player with a history of empire and a will to survive, Turkey. This isn't just a comparison of numbers on a spreadsheet. This is a clash of economic philosophies, a battle of resilience, and a test of national ambition. Friends, India is considered one of the fastest growing economies in the world. On the other hand, Turkey has been struggling with inflation and a currency crisis. But the big question is, in 2025, who will really win the growth race? India or Turkey? Type your guess in the comments right now. India or Turkey? Let's get straight to the headline numbers, the figures that define the economic narrative. For 2025, projections from the IMF, projections from the World Bank, India is expected to clock a stunning GDP growth rate of around 6 to 6.5%. Let that sink in. Major economies are struggling to even hit 2%. India is galloping forward, creating wealth and opportunities at an unprecedented scale. This isn't a one-off spike, it's a sustained trend, testament to India's fundamental strength. This is what makes India the fastest growing major economy. Now, let's turn our gaze to Turkey. The story here is dramatically different. Turkey's forecast for 2025 is a much more subdued 3%. 3% is a world away from India's powerhouse performance. On the surface, the GDP race looks open and shut. India wins, and it wins big. But is GDP the only measure of an economy's health? Does a single number capture the whole story? No, we must look deeper. Now, let's talk the single biggest monster haunting the Turkish economy, inflation. Viewers, the numbers are staggering, almost unbelievable. While India has managed to bring its inflation rate under control, keeping it within a manageable band of 4 to 5%, Turkey is battling a hyperinflationary crisis. We are talking about an inflation rate that has been hovering around a jaw-dropping 50 to 60%. This isn't just an economic statistic, it's a daily nightmare for the Turkish people. It means the money in their pockets is losing half its value every year. It means their savings are being wiped out and their future is shrouded in uncertainty. Let me put this in perspective for you. Imagine you are an investor, a global fund manager with billions of dollars to deploy. I ask you a simple question. Would you invest your money in a country with 60% inflation? Would you park your capital in a place where the Turkish lira is in freefall, making any potential gains worthless when converted back to dollars? The answer is a resounding no. This is the core of Turkey's problem. High inflation destroys confidence, deters investment, and creates a vicious cycle of instability. It is the single greatest obstacle standing in Turkey's path. In stark contrast, India's handling of inflation has been a masterclass in prudent economic management. The Reserve Bank of India, working in sync with the government, has used monetary policy effectively to keep prices in check without strangling growth. This stability is India's secret weapon. It gives consumers the confidence to spend, businesses the confidence to invest, and international partners the confidence to engage. It creates a predictable environment where long-term planning is possible. This is why global manufacturers are flocking to India, and this is why our stock markets are reaching new highs. Stability is the new currency of power. So when we compare India and Turkey, the inflation story is night and day. India has successfully tamed the inflation dragon, creating a foundation for sustainable, long-term growth. Turkey, on the other hand, is still in the midst of a ferocious battle with this beast, and the fight is far from over. The government's recent shift to more orthodox economic policies, including sharp interest rate hikes, is a step in the right direction, but the road to recovery will be long and painful. For 2025, this massive inflation differential gives India an almost insurmountable advantage in the race for economic stability and investor confidence. On the surface, GDP says India is ahead. But is GDP the only measure of strength, or should we look deeper? High GDP growth is fantastic, but what if it comes with soaring inequality or a fragile banking system? A slower growth rate might be disappointing, but what if it's deliberate, building a stable foundation for the future? We need to examine the quality of growth, not just the quantity. Is the growth inclusive? Is it sustainable? India's 6.5% is a source of national pride and shows momentum. But we cannot dismiss Turkey's 3%. Understand the context behind these numbers. India is in rapid expansion, building infrastructure, leveraging its demographic dividend. Turkey is in consolidation, stabilization, trying to fix fundamentals after unorthodox policies. The race is not just about speed, it's also about endurance and strategy. And that is a far more interesting, a far more complex debate. An economy's strength is often measured by what it sells to the world. Let's look at the trade figures from 2023-2024. India's total exports crossing the $770 billion mark, aiming for $1 trillion. While India runs a trade deficit, meaning it imports more than it exports, the key is the composition of its trade. India is a dominant force in services exports, IT services, software services. This is a high-value sector, showing intellectual capital. The Make in India initiative is boosting manufactured exports. Now let's look at Turkey. Turkey has a strong export-oriented manufacturing base. Its goods exports hover around $250 billion. Turkey has persistently run a large current account deficit. That makes it heavily reliant on foreign capital inflows. This deficit is a major vulnerability when global conditions tighten. Unlike India, whose deficit is financed more by stable foreign direct investment, Turkey's has often been financed by volatile short-term debt. India's deficit is driven by massive imports of energy and capital goods to fuel growth. Much is offset by a massive services surplus, a shock absorber. Turkey's deficit has been worsened by a currency crisis. That makes imports more expensive. Turkey also relies heavily on imported energy. India's trade is globally diversified. Turkey is heavily dependent on the European Union. In a world of geopolitical shifts, India's broader market access gives more options and security. The question of a trade surplus is crucial. Neither India nor Turkey consistently runs a surplus, but the nature of their deficits is different. The verdict on trade points to a stronger, more resilient Indian position. To truly understand an economy, you have to ask a simple question. What does it actually make? What are its core strengths? For India, the answer is multifaceted. The first and most famous engine is information technology and services. From Bengaluru to Hyderabad, India is the back office of the world, the software developer for global corporations, a hub of digital innovation. India is also a pharmaceutical giant, rightfully called the pharmacy of the world, producing affordable, high-quality generic medicines for the planet. Textiles, agriculture, a rapidly growing manufacturing base. Now, let's examine Turkey's engine. Turkey's strength is powerful, sophisticated manufacturing. A major European hub for automobiles. Ford, Renault, Fiat. Many light commercial vehicles in Europe are made in Turkey. Beyond vehicles, home appliances, textiles and apparel, construction materials. Turkish contractors building projects across the Middle East, North Africa, and Central Asia. Turkey's engine is industry. Factories and tangible goods you can see and touch. Look around your home or office. How many products say made in India versus made in Turkey? Indian pharmaceuticals in your medicine cabinet. Indian software running on your computer. A shirt made in Turkey. A Turkish-made television. This exercise shows the different roles in the global supply chain. India's strength, knowledge-based industries and services. Turkey's strength, traditional and advanced manufacturing, close to Europe. Each model has strengths, but India's aligns more with the digital, knowledge-based 21st century. So, who owns the future? Is it the nation that writes the code and designs the green technology, or the one that assembles the cars and weaves the fabrics? This is the fundamental question when we look at the future trajectory of India and Turkey. India is making a massive, undeniable bet on the future. The Digital India campaign, the explosion of startups creating unicorns at a dizzying pace, and the aggressive push into renewable energy, especially solar, all point to one thing. India is not just participating in the future, it is actively trying to build it. The country is becoming a global hub for innovation, research and development. Turkey's focus, while also forward-looking, is different. Its strength lies in refining and perfecting its role as a high-value manufacturing hub, tourism hub. The country is investing in upgrading its factories to be more efficient and technologically advanced. It is also a tourism superpower, attracting millions of visitors with its rich history, beautiful coastlines, and world-class hospitality. While it does have a growing tech scene, particularly in gaming and e-commerce, it does not yet have the scale or the global impact of India's tech ecosystem. Turkey's strategy seems to be one of consolidating its existing strengths rather than trying to invent entirely new ones. I ask you tonight, who has the more resilient strategy? India's focus on IT, startups, and green energy is a bet on high-growth sectors that will define the global economy for decades to come. These are industries with high margins and immense intellectual property value. However, they are also highly competitive and require continuous innovation. Turkey's focus on manufacturing provides a solid, tangible economic base. Tourism provides a solid, tangible economic base. People will always need cars, appliances, and holidays. Ultimately, owning the future requires more than just a plan. It requires an ecosystem. India is building this ecosystem with its IITs and IIMs, its venture capital funds, and its government policies that foster innovation. It is creating a generation of entrepreneurs and tech wizards. Turkey, while possessing a skilled workforce and strong industrial know-how, is still hampered by economic instability that makes long-term bets on risky futuristic ventures more difficult. Follow the money. It's the oldest rule in the book. It tells you everything about investor confidence. Let's compare India and Turkey as magnets for global capital. India is now one of the world's top destinations for FDI. It has attracted tens of billions annually from giants like Google, Apple, Foxconn. Investors see a stable, democratic India. They see a massive domestic market. They see a pro-business government. They see a predictable policy environment. They see growth and opportunity. They see safety for their capital. Now, Turkey. The story is caution. Big problem: high foreign-denominated debt. Turkish firms borrowed heavily in dollars and euros. That was fine when the lira was stable. The lira collapsed. Servicing dollar and euro debt became excruciatingly expensive. Corporates are under immense pressure. Add high inflation. Add unpredictable policy shifts. Foreign investors grew wary. FDI still comes to Turkey, especially in real estate. Manufacturing too. But it's nowhere near the scale or quality India attracts. Why favor India? Simple. Risk versus reward. Reward in India: access to 1.4 billion people and a rising middle class. Risk: manageable thanks to political stability and prudent economic management. Turkey's reward: strategic location and skilled workforce. Turkey's risks: currency volatility, high inflation, geopolitical complexities. Capital is a coward. It runs from uncertainty. This gap in capital flows matters. FDI into India brings technology, management expertise, access to global supply chains. It's building factories, high-quality jobs, and modernizing India. Turkey relied more on hot money, short-term flows that can exit fast, creating instability. For 2025, India's FDI advantage gives it a self-reinforcing growth edge. India is the third largest economy in the world by purchasing power parity. Turkey, meanwhile, is a strategic country that connects Europe and Asia. India-Turkey bilateral trade in 2023-2024 was about $10.43 billion. India exported goods worth 6.65 billion to Turkey, while importing only 3.78 billion. That means India has a trade surplus. India's strengths: IT, pharma, textiles. Turkey's strengths: manufacturing and vehicles. Question for you. In your country, do you see more products made in India or made in Turkey? Comment below. An economy does not exist in a vacuum. Its success is deeply intertwined with its global standing and influence. Let's place India and Turkey on the geopolitical chessboard. India is playing a multi-aligned global game. It is a leading voice in the G20, a foundational member of BRICS, and a key partner in the Quad. It maintains strong relationships with the United States, Europe, Russia, and the Middle East simultaneously. This strategy of strategic autonomy allows India to be a leading power rather than just a balancing power, shaping global conversations on everything from climate change to trade. Climate change, trade. Its influence is broad, deep, and growing every single day. Turkey's role is different, but also critically important. As a member of NATO, it holds a vital position in European security architecture. Its strategic location controlling the Bosphorus Strait, influence in the Middle East, Central Asia, North Africa. Turkey often acts as a broker, a mediator, and a disruptive force. However, its relationships with its traditional Western allies, particularly the US and the EU, have been strained at times. Its power is more regional and sharp-edged, whereas India's is more global and consensual. The predictions from global institutions like the IMF and the World Bank are overwhelmingly in India's favor. They consistently project India to be the fastest-growing major economy, citing its strong domestic demand, ongoing reforms, and favorable demographics. The narrative is one of unstoppable ascent. For Turkey, these institutions see potential, but also significant risks. They acknowledge that if Turkey sticks to its new orthodox economic policies and tames inflation, its economy could rebound strongly. But the if is a very large one. The potential is there, but realizing it depends entirely on disciplined policy execution. So who holds the stronger cards for 2025? India's position is undeniably more secure. Its rising economic might is translating directly into greater geopolitical influence. The world needs India's growth, and that gives India a powerful seat at the high table. So, after examining the evidence from every angle, the verdict for the 2025 growth race is clear. It is decisive, and it is undeniable. India is not just leading, it is in a different league altogether. With a projected growth rate more than double that of Turkey's, a stable inflation environment, and a tidal wave of foreign investment, India is the undisputed winner. This is not a matter of opinion or sentiment. It is a conclusion based on cold, hard facts. India's economic engine is firing on all cylinders, powered by technology, services, and the aspirations of 1.4 billion people. The momentum is powerful and shows no signs of slowing down. But let us be fair, this does not mean Turkey is out of the game. To dismiss Turkey would be a grave mistake. The country possesses fundamental strengths that should not be underestimated. A strategic geographic location that is the envy of the world, a robust and sophisticated industrial base, and an incredible tourism potential. If, and this is the crucial word, if its leadership can successfully navigate the treacherous path of economic reform, stabilize the currency, and restore investor confidence, a Turkish comeback could be swift and powerful. The potential for a rebound is very real, but it remains just that, potential. The race for 2025 clearly belongs to India. The nation is building a modern, diversified, and resilient economy fit for the 21st century. Its lead is built on a foundation of political stability, demographic advantage, and a clear vision for the future. Turkey's journey is one of recovery and rebuilding. Its primary challenge is not external competition but internal economic management. The path ahead for Turkey is about discipline and difficult choices. It is a battle against inflation and for stability.